Hello and welcome to the special edition of Focus On, where we are featuring the Southern Africa Europe CEO Dialogue. I am Noluthando Mtondi. The 8th edition of the Southern Africa Europe CEO Dialogue saw top-level business and institutional leaders from both continents gather in Johannesburg to discuss long-term growth of strategic trade and economic relations between Europe and Southern Africa. The Africa Continental Free Trade Area Agreement was top of mind at the event. We spoke to Musa Shabalala, Group CEO at the Gauteng Growth Development Agency, on their role in supporting both local and foreign investors.
Key takeaways is, as a South Africa, we really do need to ensure that we increase our engagement with private sector, with investors, to understand what their key challenges are. 1. 2, and this is from a public sector perspective. 2, we really do need to ensure that we're improving, continuously improving at least, the logistics blockages and challenges that exist all the way from our ports, rail and road, and ensure that we are supporting businesses to get their goods coming in from an import perspective and get goods out from an export perspective. You know, those are creating serious frustrations, and those blockages are hampering the necessary economic growth and production that we need to see improving.
Perfect. Now, obviously, there's been a lot of talk around AfCFTA. What is GGDA's role in facilitating the AfCFTA?
As an investment promotion agency, first of all, it's important for us to understand what the free trade area is and what the free trade agreement actually entails, and the basket of goods that has been put forward by South Africa, but also by the rest of the countries that have signed up to it. Secondly, is to ensure that we support and facilitate Gauteng-based businesses in identifying and then taking advantage of opportunities that exist on the continent with regards to the free trade agreement, and identifying as well what we can bring in from an import perspective from the rest of the continent as opposed to from outside of the continent. And I think lastly, for us as Gauteng, because we are so advanced from an industrial perspective, it's a great opportunity for us to increase our manufacturing capability, and increase the export volumes that are currently coming from Gauteng and South Africa.
And if you'd like to chat about some of the steps taken by GGDA to open up the opportunities the AfCFTA holds business in Gauteng?
So I think one of our key and flagship programs is the export readiness and export training workshops that we hold for the different SMEs and larger businesses in the various sectors. We do that in collaboration with the DTIC, and that really is to ensure that businesses that exist in the province understand what export means, what export entails, and what export opportunities exist. But secondly, we've actually initiated a IPA CEO forum for investment promotion agencies across the continent. And the reason we do that is they have the exact same mandate as what we do in South Africa. And so if we can then, through those relationships and that CEO forum, start identifying investment and other trade opportunities, it really is going to accelerate the pace at which we can bring effect to the free trade agreement.
Now, we've seen some developments around the special economic zones in Gauteng. What does this mean for inter-Africa trade?
It's a step in a very positive direction. So from a Gauteng perspective, we are ensuring that all the SEZs that we are rolling out are anchoring the economic nodes according to our 10 priority sectors in the province. And so we've already got 2 SEZs. One is already operational, the OR Tambo IDZ, which is at the OR Tambo airport, and that's been in existence and operation for about 5 years. The second is the automotive SEZ, which is the one that is in Tshwane, and I think there's been a lot of publicity and media around that one because, again, very exciting component manufacturers and those investors in the automotive space anchoring there. But we also have a VAL SEZ, which will anchor the alternate or the green hydrogen and energy mix, and ensuring that we revive the steel industry of South Africa. And then the West Rand SEZ, which will be anchored by the agricultural and agri-processing and agri-manufacturing sector. So our SEZs are primarily focused on ensuring that we increase our manufacturing capability in the province and therefore increase the job creation and export capability and ability of South Africa.
Staying with the AfCFTA theme, Secretary General of the African Continental Free Trade Area, Wamkele Mene, delved into the opportunities he sees between the two continents.
What I've sensed from all the panelists and the panel discussions is that there is a strong willingness to partner with Africa on trade and investment. and to make sure that particularly in the context of the AfCFTA, as it is being implemented, that European businesses and companies and investors, that they see an opportunity in it for themselves. So it's been a very encouraging to listen to the positive spirit of investors as we consolidate this large market in Africa.
And then you mentioned you're going to be introducing a strategy involving the private sector. Can you chat a little bit more about that strategy?
We're focusing on 4 value chains: agro-processing, automotives, fisheries industries, pharmaceuticals, because we know that there's no trade agreement that works without the private sector. So as I was saying during the last question, so we want to bring investors that will identify, if we're talking about agriculture, that will identify farmers and establish supply chains so that those investors are directly connected to the producers. In the area of pharmaceuticals, similarly, we know that agriculture is a very big part of pharmaceuticals production. So we want to make sure that this value chain is created and that it is seamless. Automotive sector is a big driver of investment, a big driver of industrialization on the African continent. And we know from the experience of South Africa that in the automotive sector, 1 job is on the assembly line, 3 jobs are in the component sector. So these are the areas where we see the opportunities for matchmaking between investors and the people for whom we want to see benefits in terms of job creation.
The AfCFTA connects almost 1.3 billion people across 54 countries with a combined GDP of $3.4 trillion US. On one of the panel discussions, former Minister of Trade Bugolo Kenwende said streamlining the implementation of the African Continental Free Trade Area was one of the areas key to its success.
We can certainly do more to make the AfCFTA a reality, and that there's work for both the government and the private sector. For the government is to create an enabling environment and ensure that they are facilitating trade, and for the private sector to rise to the challenge of the already existing commitments made around industrialization and the value chains that have been identified, which are about 10, including pharmaceuticals and batteries and agro-processing. So there's a lot that can be done, and there are a lot of opportunities. We need to work together, including other development partners, to ensuring that the AfCFTA lives on, but to ensure that there's economic development that creates jobs.
Gwedo Giachetti is the executive chairman of RDC Properties Limited, the first listed property company on the Botswana Stock Exchange. In South Africa, RDC Properties has investments of around 6 billion rand. Giachetti gave some insight into the pillars they look into before they invest in a country and future plans for the company.
Properties was the first listed property fund on the Botswana Stock Exchange, and from Botswana we are diversifying and have invested in the region, and from the region to the States and to Europe. RDC Properties we own and manage properties that are strategic and that add value to the communities that we serve.
Can you elaborate on that?
Indirectly, the properties that we own and manage are actually in the hospitality field, and one of the investments we are doing is in a biotechnology hub in Woodstock in Cape Town, and we are proud to say that that biotechnology hub will be probably out to the market at the mid next year with a number of biotechnology firms that have shown interest into it. So that's one of the sectors that we've been pushing. The other sector is the hospitality, and we've just bought and we operate the Radisson Red that has opened here in Rosebank. It was opened officially on the 11th of November, and it's proving to be very popular and a nice investment for our group. And the Tower Property Fund that we've invested in has investments in South Africa, in Cape Town, and in Gauteng, and in Croatia. So for us it's a way of diversifying the Botswana economy through an investment in South Africa, and from South Africa to Europe. That's what we like to see.
Sure. Now we're here at the Southern African Europe CEO dialogues, and what were some of the key takeaways from the session that you were on earlier?
I think the key takeaway is implementation. As usual, we hear quite a lot at these summits how Africa has got some great potential, great ideas, but implementation is what we really need. And I think that is one of the key takeaway, the importance of implementation and bringing all these projects to fruition. And I hope that the participants will do their best to implement all these good ideas.
Now, during the session, you mentioned something about pillars, how important these pillars are for you before you invest in a country. Can you chat to us about these pillars?
Yeah, so I was talking about some of the pillars that are important for us is the rule of law, the importance of democratic transitions and elections, and the independence of the central banks. Those are the pillars that will make us confident and be investing in different countries. Clearly, the ease of business is a very important one, as the fourth pillar that we believe in, and we hope that all these African countries can improve their ease of doing business so that we can flow capitals from one country to the other. We are fortunate that in Botswana we have a small economy but endowed with good governance and with no exchange controls, so we are able to do things properly and invest capital that we raise in Botswana to different jurisdictions, different regions, and that is what we're really there to help communities through our investments.
Now, lastly, what does the future hold RDC Properties, given the COVID pandemic as well?
I guess, like every business, we depend very much on vaccinations and the end of the COVID and pandemic era. Clearly, once we have managed to delist the Tower Property Fund, our fund becomes a much larger fund in the region of 9 billion rand of properties, and we will then repurpose some of these properties, and we will look at investing into other source like renewable energies. We will have a firepower that is clearly allowing us to look at diversifying not only in the real estate sector but in adjacent sectors. Renewable energy is one, retirement homes is another, and continue our hospitality growth in the region.
That's the end of this edition of Focus On. For more on the Southern Africa Europe CEO Dialogue, go to cnbcafrica.com. Goodbye.